Welcome back. The annual budget is dead. Now, this is a catchphrase that has appeared in many business journals. The management of many companies are of the opinion that the annual budgeting exercise is totally worthless. It is in this scenario that beyond budgeting attains importance. Now, in today's session, you will get an insight of what beyond budgeting is all about. And if you keep watching till the end of the video, you will get quick tips to memorize the principles of beyond budgeting from the famous movie RRR.
So we will start off by analyzing the disadvantages of traditional budgets or the annual budgets. And then we will see how beyond budgeting is giving solutions to eliminate these disadvantages. Now, the first disadvantage of a traditional budget or an annual budget is that it lacks external focus. Fixed sales or cost targets are based on past events. So if you see any annual budget, what they do is they look into the past performance, they look into the past events, and then they fix the sales target for the next year. And simultaneously, they fix the cost targets as well. That is fixing those costs that are required to achieve that particular sales target. So if you see here, it is more internally focused. They are not bothered about the market or their competitors. And the problem with these fixed sales or cost targets is that the managers who are well aware that they can achieve a sales target of say $100,000, they will not agree to fix the budgets at $100,000. They will negotiate and they will persuade the management to fix a sales target of say $80,000 so that the sales target are easily achievable. So that is the meaning of underestimation of revenue. And as for cost, what they will do is they will overestimate it, so that they are never faced with a situation where they will spend in excess of the budgets. Now, this underestimation of revenue and overestimation of cost to make targets easily achievable is known by the name budgetary slack. So whenever you fix the sales targets in numbers, the manager who might be capable of achieving a higher sales will not work for that. They are just happy to achieve the budgets. So basically, there could be an underperformance on the part of the managers because they very well know that once they achieve the budget, they will get their bonus. Now we will see the solution that is provided in Beyond Budgeting. Now in Beyond Budgeting, you have something called the plans and the targets. Now plans and the targets are not the same thing. Plans or forecasts are the most likely outcome, and the targets are what the company ideally like to achieve. And what the company ideally likes to achieve, or the targets, are market-driven or market-related targets. And they are not absolute numbers like a sales target of $100,000 or $120,000. They are the key performance indicators, like the return on capital employed, say if it is 20% in the market, then they will fix the target also at 20%. That is basically, it is based on relative performance. Now, what do you mean by relative performance? We will take your case itself. Suppose for the first mock exam, you secured a mark of 45. And in the second mock, the marks that you secured is say 51. So when you compare your 51 marks with your 45 marks, then that is known as absolute performance. But if you compare your 51 marks with world-class standards, that is with the best student who has secured say 80 marks, then that is known as relative performance. So what Beyond Budgeting says is always go for relative performance. That is, you have to compare with your peers or your competitors or with world-class benchmarks. So please note here that in Beyond Budgeting, plans is not equal to the targets. The plans and the targets are two different things. And the company always tries to bridge the gap between the plans and the targets. Now, if you compare it with the traditional budgeting, their plans and targets all are same. And if you see here, the key performance indicators are generally ratios. So what happens is, if say the return on capital employed as per the industry standards is say 10%, then the manager will be happy to accept any contract where the expected return exceeds 10%. He will not restrict his performance. But under traditional budgeting, the manager will restrict his performance, because as soon as he hits the budget figure, then he's happy because his bonus is assured. Moreover, goals based on past performance are quickly outdated, because these budgets have been prepared without evaluating the external market conditions. And since these budgets are fixed, it prevents continuous improvement. Now, the solution for this that is provided in Beyond Budgeting is rolling forecast makes plans relevant in the ever-changing business environment. So in Beyond Budgeting, they always advocate rolling forecast. Rolling forecasts are budgets which are updated either on a monthly or on a quarterly basis, so that it is relevant in the ever-changing business environment. And thereby, it facilitates continuous improvement also. Whenever we see an opportunity for reducing the cost, etc., then immediately the rolling budget picks that. And the second disadvantage is there is no autonomy. There is centralized decision making, which means that the lower level managers do not have any freedom to decide. It takes a longer time to respond to business opportunities and threats, because they'll have to call up the higher level managers, get their approval, and only then they can act. Now, the solution given in Beyond Budgeting is there is autonomy. It is a decentralized decision-making setup, and there is a lot of teamwork between the employees. So when it is a decentralized decision-making setup, the lower level managers have got the freedom to respond promptly whenever there is an opportunity or a threat, without waiting for detailed approvals from the bureaucracy, that is from the higher level managers. Now, in traditional budgets, it is rules-based management.
Employees execute the instructions and the rules. They do not have the decision-making power. But in Beyond Budgeting, it is the value-based management, which means that it enables employees to create value to the customers. What do you mean by creating value to the customers? It means that doing only those activities which the customer needs. And how is that possible? Now we know that it is the frontline employees who are closely interacting with the customers. So if they have the decision-making power also, they can make changes to suit the customer's needs. That is why it helps in value-based management. And the next disadvantage of traditional budgets is information is restricted. Frontline employees do not have access to all the information. Now, the frontline employees do not know what is the profit of the product that they are selling. So sometimes if the customer asks for a higher discount, they will be reluctant to give, because they are not sure of the profit that the product earns. But in Beyond Budgeting, information is freely available. Now, whenever information is freely available, we use the word transparency. The frontline employees and the management have access to all the information. There is nothing which is hidden from the employees. The frontline employees know the profit of the product that they are selling, and even the management knows what the frontline employees are doing, because all the information is very easily available. So what is the advantage? It helps in creativity. Creativity on the part of the frontline employees, because once they know the profit of the product, they can decide on their own whether it is better to give an advertisement or whether it is better to give a discount without actually consulting with a higher level management. And these advertisements and discounts may actually increase the sales. And as for management also, this transparency helps in controlling the frontline employees, because since all the information is readily available in the MIS, that's the Management Information System, they can very well intervene if there is a major deviation, and they can suggest remedial actions. So it is helpful in two ways. That is, the availability of information improves the creativity of the frontline employees, and it also helps the top management to control the frontline employees. Now, the next disadvantage of traditional budgets is the improper deadlines. Target deadlines are not to be based on the calendar year, but should be based on each situation. Now, for the annual budgets, December 31st is a deadline. Now, is December 31st an auspicious day? Why should we fix the deadline on December 31st? It should be based on each situation. Now, the solution which is given by Beyond Budgeting is all the deadlines should be based on the business rhythm. Target setting, resource allocation, reviews, etc., are to be based on the business rhythm and the events. That is, each situation will be different. As an example, if you are selling your products in an exhibition, say the exhibition runs for 3 days, then the target should be set, the resources should be allocated, and the reviews should be done for a period of 3 days. But if the situation is different, say you are entering a new market, so it will take time for you to acquire a market share in the new market. So that will take a longer time. So the deadline should be after a longer period. So basically fixing December 31st as the deadline is not at all appropriate for any business. Now the next disadvantage is rigid resource allocation. Now, all the resources are allocated in the previous year when annual budgets are prepared. That is, there is always line by line budget. How much to be spent for advertisement, how much to be spent for traveling. So, since these budgets are fixed, you know what the problem is? The philosophy of if you don't spend it, you lose it results in a spending fever. What do you mean by the sentence? If you don't spend it, you will lose it. It means that if the budget of advertisement, say it is fixed at $10,000 for the current year, and the manager say he expends only $8,000 towards advertisement. So what happens is next year's budget will be based on this $8,000 and he might not get $10,000 even next year. It will be increased only by a negligible margin and maybe he will get a budget of $9,000 towards advertisement. So to prevent that, what the managers will do is they will spend the entire amount of $10,000 towards advertisement, though it is not actually required.
Moreover, inflexible cost targets limits the business. What is the meaning of the sentence? Now we will take the very same example of the advertisement budget of $10,000. In the future, an opportunity comes up and the manager is almost sure that if he spends an additional $10,000 towards advertisement, he can capture that opportunity and the sales will shoot up. But he's not 100% sure. So what will happen is he will think, why take a chance? And he will not spend the additional amount on advertisement and that opportunity will be lost. That is the meaning of this sentence. The inflexible cost targets will limit the business. Now, in Beyond Budgeting, they empower the operational managers to act by removing the resource constraints. So basically, the responsibility is getting shifted to the operational managers. They have to decide what is right and what is wrong depending on the situation. Key ratios are set rather than detailed line by line budget. So an overall framework is known, and within that framework, they have to decide what is best suited for the organization. Now, in this context, I will show you the expense policies of two companies, one that follows the rigid budget and the other that does not follow a rigid fixed budget. Now, you all have heard about the company WorldCom, the American telecom giant that went bankrupt and was involved in the accounting scandal. What was the scandal about? Now, WorldCom could not sustain their profits. Their profits were dropping. So what they did is they treated an expense as an asset so that the profit will be inflated just to maintain their share prices. Now, after the scandal was brought to light, employees of WorldCom were interviewed, and it was revealed that the CEO, Bernie Ebbers, always had a budget, and he always used to stipulate that you should be 2% under the budget. Just imagine the situation. Already we are strangled with the budget, and on top of that, he's telling please be under the budget by 2%. In spite of having a rigid budget, did WorldCom flourish? No, right? You have to look into the opportunities and threats and respond accordingly. And as for Netflix, the policy is act in Netflix's best interest. So you might wonder, don't they have a budget for expenses? No, they don't have a budget for expenses, but their policy is all the managers should act in Netflix's best interest, or they should consider the money as their own and then they should spend it. Now, when this policy was implemented, the responsibility got shifted to the employees. And after all, the employees of Netflix, they are A-class employees. They are not some fourth standard students who have to be guided as to what is to be done. So the ultimate result was the expenses actually got reduced. And as an example, they have said earlier when traveling expenses had a budget, that is, they used to have a travel agent do all the bookings. But when this was implemented, the employee said, we will do the bookings on our own. And as you know, if you go through a travel agent, they always have their margins and it might not be the best price. But when you do the online bookings on your own, it ends up to be at a much cheaper price. So traveling expenses witnessed a sharp downfall when the employee started booking on their own and did not depend on the travel agents. And what they say is earlier when there was a budget, the managers ate in lavish restaurants. But once the budget was taken off, they used lavish restaurants only for client meetings or meetings that would affect their sales. If they are having food on their own or with a Netflix colleague, they did not eat in lavish restaurants. And again, there was a sharp fall in the actual expenses incurred. As per Netflix, when there is a clear expectation of responsible behavior, then most of the employees will comply or will agree to that behavior. So coming back to our point, when the operational managers are empowered, it creates responsible managers and they have quick response capabilities because they have got the power to decide as to how the resources of the organization has to be spent.
So whenever there is an opportunity or a threat, the operational managers can immediately gather the resources to face that opportunity or threat. That is the meaning of these words, with quick response capabilities.
Another disadvantage of traditional budgets was it was a budget-based review. Performance is evaluated based on whether budget was achieved. So basically, it's the variance analysis. If there is a favorable variance, then they say that your performance is good. And if the variance is adverse, then they say that your performance is bad. So performance evaluation was always based on the budget. Since budgets are internally focused, it is not the best method for performance evaluation. Now we will go to the next disadvantage also because it's a related point. Next disadvantage is individual rewards. Individual incentives based on budget. So rewards are given based on the budget achievement. If they exceed the budget, like the sales target, if it exceeds the budget, then the sales manager gets a bonus. So the problem is because it is individual incentives, nobody will share the best practices within an organization because we are always trying to beat our colleague and get the bonus. Now, in beyond budgeting, the review or the performance evaluation is based on external benchmarks. It could either be the industry averages or the world-class benchmarks. So since we are externally focused, that is a better method of reviewing the performance of the employees. And as for the rewards, it is profit sharing and not individual incentives. Now, a portion of the total profit of the organization gets shared between all the employees. It is not that you're giving bonus to the best salesman. So basically, every salesman gets a share of the profit. So what happens is, each salesman will try to help the other salesman. That is, they are trying to increase the total profit of the organization by sharing the best practices. The rewards are given by profit sharing and not by individual incentives. And as reviews and rewards are separated, if you see here, review is based on external benchmarks. If an employee is unable to meet the external benchmarks, then every attempt is made to bridge the gap. It is not based on the review that an employee gets rewarded or penalized. So the review takes place separately and the rewards are completely different. So since review is based on external benchmarks, it results in learning on part of the employees. And because it's a profit sharing mechanism, employees share the best practices among themselves so that the total profit increases and they all get a higher share out of it. This results in healthy competition. And moving to the next disadvantage, there is lesser customer focus for traditional budgets. The focus is more on achieving the sales targets. Now, if you check with your parents, they will tell you that towards the end of the year, they usually get a call from the bank. The request will be very simple. Please deposit some amount in the bank and you can withdraw it the next month. That is after the close of the financial year. This is just to achieve their targets. They are not interested in the customer's needs. But when it comes to beyond budgeting, the focus is on the customer's needs and they avoid the sales targets. Now, if the same banker calls the customers and says, we are willing to give a higher interest rates. So is it possible to deposit some amount in the bank? Then such customers who deposit the amount will not withdraw the amount next month because they are interested to get a higher rate of interest when compared to the other banks. So always focus on the customer needs because that is what is required for the success of the organization. Now, if you see here, we have compiled the principles of beyond budgeting under 8 heads. Now, the questions that can come for the exam will either be related to the disadvantages of traditional budgets or the advantages or the principles of beyond budgeting. So it is very essential that you recollect the key points that have been taught. Now, this is an out and out theory topic and many students find it difficult to recollect the key points. So an easier method to recollect the key points is to link it to a movie or a story or a song. So that's what we are going to do next. The song Naatu Naatu from the movie RRR has become a global hit. And after its Oscar win, there is no other better movie that we could take for recollecting our key points relating to beyond budgeting. Now, people who have seen the movie, they know that there are 2 lead actors. So it's a pair. And we as spectators or customers for the movie, we have been delighted and enthralled with the movie RRR. Now, the catchphrase that I want you to remember is, pair in RRR is a customer delight. Pair means the 2 lead heroes. RRR is the name of the movie. And customer delight is we all are the customers of RRR. We all have viewed the movie and we all are delighted with the movie. Now, the key words are pair, RRR, and customer. Now, the P stands for plans and targets. That was the first principle of beyond budgeting. And what was the explanation? In beyond budgeting, they use rolling forecast and it is always market-related targets. And the A stands for autonomy. Autonomy means freedom. Freedom for the managers. If you recollect, the movie RRR is also related to the freedom struggles of India. So autonomy or freedom is another principle of beyond budgeting. And how does the organization give autonomy to the managers? By decentralization. Now, the third principle starting with I is information. Information is always freely available in the organization for the frontline employees and also for the top management, or there is transparency. And the R stands for rhythm. Just like every music has its own rhythm, that is the duration and the frequency of notes are different for different music. Every business will also have a different rhythm. that is the duration and the frequency of events will be different. So according to Beyond Budgetings, our budgets are to be based on the business rhythm and events and not based on the calendar year. The next R stands for resource allocation. Now, resource allocation is never done by a line-by-line budget. There are certain key ratios which are provided to the managers, and they can decide within the broad framework as to how the resources have to be allocated. Now, the next R stands for review. Review or performance evaluation. How is performance being evaluated? It is based on external benchmarks. The next R stands for rewards. How are the employees getting rewarded? They are not given individual incentives, but it is a profit sharing mechanism. And finally, the customer. There is always focus on the customer and they avoid sales targets. So this is the summary of the principles of Beyond Budgeting, from where you can understand what are the advantages of Beyond Budgeting also. So just remember the sentence, pair in RRR is a customer delight. And this RRR, you can connect it with your life also. Now you're preparing for your ACCA exams. So initially, what will you do? You will allocate the resources, right? The money that you spend for the books, the money that you spend for the tuitions, that is all the resource allocation that you're doing. And next, you've got a review or performance evaluation. That is nothing but your ACCA exams. And finally, you're getting rewarded by getting the ACCA certificate. So adopt multiple methods so that your revision becomes much easier. Now, we have already completed the advantages of Beyond Budgeting, but like any other methodology, it is not free from disadvantages. So we will just take a quick look at the disadvantages or problems in implementing a Beyond Budgeting setup. The first disadvantage is it is not suited for the public sector. Legal and financial framework of public sector organizations prevent such a system being introduced. Now, there are so many legal regulations for a public sector, and also the financial framework is such that Beyond Budgeting cannot be implemented just like that, because you cannot say to the public sector organizations, do not have a budget. You should have a budget, you should get it approved, and it is within that framework that a public sector organization works. So Beyond Budgeting, it's very difficult to implement in a public sector. And the second disadvantage is it requires organizational, managerial, and cultural changes. Just imagine the change that an organizational setup needs. First of all, the organizational structure, it cannot be centralized. It has to be a decentralized system. The managerial mindset should also change. You should give freedom to your fellow workers so that they can be innovative and they can think and act on their own. And cultural changes, whenever you are reviewing employees, it is not based on that review that you reward them. The review process is just for employee learning and development. And how are they rewarded? They are rewarded not by giving a bonus. They are having a profit share. So there are many changes that are required for the Beyond Budgeting system to be implemented. So the explanation is presents behavioral challenges and individual managers might become overwhelmed by the complexity of decision making in such an unregulated decision-making environment. It is actually very complex given our mindset that we are always bound by certain rules. Now we are free to act. All the managers might not be capable of managing affairs in an unregulated setup. With this, we come to an end of the topic Beyond Budgeting. I will show you the recap slides by giving all the key points. So all that you have to do is you have to elaborate those key points based on the understanding that you have gained from this video. So let's move on to the final recap.